Okay. Okay. So we are moving on to our inventory, to our next asset, which is inventory. Ne? So the opening balance. And then probably some of you are wondering why we are writing the balance on the opening balance on the debit side. Because opening balances of our assets, please take note that opening balances of our assets is always on the debit side. And that's why you are saying that's why you are seeing opening balances on the debit side. They can never be on the credit side. So just take note of that. Okay, so we have opening balance of how much? What is our opening balance of inventory given in the financial statement? 70,000, eh?
Yes, 70,000.
70,000. And then we are told that revaluation
65.
65. Okay.
Question.
Yes. There's someone with a question? Oh, okay. So this is very interesting because now in this case, the inventory did not increase in value, but it decreased. Ne? We had inventory valued at 70,000. However, now it's valued at only 65,000. Okay. So that means that we come to balancing. Which side is big? The 70,000 is big, right? So you write the 70,000 on both sides. You write the 70,000 on both sides because that's the biggest amount. And then now in this case, the 65 is on the smaller amount is now on the credit side, right? No more on the debit side. So in this case, now we need to balance off. We said that we do not balance off, but we transfer or we close off to our capital account. Now in this case, we have capital Sarah. So what is the decrease? What is the decrease amount?
5,000.
So we have a decrease of 5,000, right? So that 5,000 is the one to be distributed among the partners. That 5,000 loss should be distributed among the partners. So 5,000 multiplied by 2/5. 3/5. Then you get how much?
3,000.
You get 3,000. And then we move on to capital Mary. Um, 5,000 again. 2/5. Which will give us
2,000.
Yes, which will give us 2,000. And then we go back to our journal entry. Now looking at this journal entry, we said it's a loss, right? Inventory has decreased. Do you understand? So we made a loss on revaluation. Therefore, where do we record that loss on the capital account? Where? On the debit, right?
Yes.
So we have to debit our capital Sarah with 3,000. And then capital Mary with 2,000. And then we credit our inventory. You can even tell that, you can even see that the inventory here is credited. It's the amounts are appearing on the credit side. That's why even in the journal entry, you are crediting your inventory. And again, when it comes to the narration, you just repeat this revaluation. Now it becomes, here at machinery, it becomes revaluation on machinery on admission of a partner. And then here, revaluation on inventory on admission of a partner. So we move on to the next. So what is our next asset there? The last one actually. We have accounts receivables, ne?
Yes.
Accounts receivables, so the opening balance. How much were our receivables? Receivables. They were 154,000.
Yeah.
And then the revaluation was how much?
144,000.
144,000. Looking at this, we can already tell that we still made a loss, right?
Yes.
The opening balance is more than the revaluation balance. So our accounts receivables went decreased. So obviously the 154 is the bigger amount, so you write it on both sides. $154,000. I hope I'm not confusing you guys, please.
No, I think just suggestions for maybe new people that are joined today. I think your theory, the first class we had, your theory explanation will give you some, especially capital accounts and what.
Yeah. But something, it's only that I had, you guys are writing a test. What I usually do, I first explain the theory after doing calculations. Ne? So the theory that I
Yes.
explained is now the recordings of partnership in general. Ne? But when it comes to admission of a new partner, then I still did not explain it. So I thought you guys are writing a test on Friday, so I was like, maybe we won't get time to explain the theory, so we can just do activities. But we can still explain the theory on Sunday.
Okay.
You're all writing a test on
Sorry,
Friday,
Sarah,
right?
what test are you referring to?
What test? I think that's business statistics test, not accounting.
No, the test
told
was
you the test-
postponed to the 28th. It was postponed.
The accounting.
Yes.
For financial accounting.
Oh,
Yes,
28,
financial.
ne?
Then you guys are supposed to tell me, then I could have explained the theory first, because it's very difficult to just jump to calculations. You won't really understand because you don't have that theoretical knowledge. So
This for distance of full time.
Oh, but it's fine. You can maybe
Guys,
do
you are
that.
confusing us. Was there a test for accounting, financial accounting for distance?
is it distance
No,
of
not distance, but full time.
Okay.
Oh, we
Oh,
are together
okay.
with full time.
Sorry.
Oh. All right. I was also confused. I'm like, oh, now checking on my module.
Okay, so the test is for full time, not distance.
Yes, it's for full time.
Thank
Okay.
you, Lord.
So we can have another session tomorrow where I do the explaining. Maybe 1 hour or 2 hours will be enough. for us
No,
to-
Sarah, we are having a test on Friday for statistics.
Oh. Oh, yeah, ne? So you will have business stats class. That was even supposed to be today.
Wait. Business statistics are distance or full time?
Distance.
Oh, thank you.
Okay, can we quickly continue?
Yes, Sarah.
Okay. So 154,000, what is the decrease amount in the account receivables? What is the loss on the revaluation?
10,000.
How much?
10,000.
10.
10,000.
10,000.
Okay. So in
Yeah.
this case, will be 10,000 times 3/5, which will give us 6,000, eh?
Yep.
And then we have capital Mary, which will give us 2/5. Will give us 4,000. And then we transfer our information. We move on, we transfer our information to the general journal. We said a loss on fixed assets is recorded on the debit side of your capital accounts. Your capital accounts will need to be debited. In other words, you have capital Sarah of how much? Of 6,000. And then we have capital Mary 4,000. And then we have accounts receivables. Accounts receivables is to be credited. Why do we think we are crediting? Why do you think we credited our accounts receivables and inventory? Anyone?
Because it's a loan.
We
Because?
credited accounts receivable because it decreased.
Because it decreased, and we said accounts receivables, and these are assets, and assets decreases on the credit side.
Credit side.
Yes. And then those are the journal entries that you were required to get, then you get your full marks. So the only thing that you need to know here, just to do a recap on the journal entries, the only thing that you need to know here first, you need to first you need to identify whether the asset is increasing or decreasing. Yeah? And then if you know that if the asset has increased in value, then you need to credit your capital accounts. Then you share the profit using the old profit sharing ratio. You distributed among the old partners only. And then if it's a loss, if your assets have decreased in value, then obviously like that, it's kind of like you made a loss. So you have to debit your capital account, and then now still using the difference, the decreasing amount. So that's basically what you need to know. And please, if you are given a test or exam, I advise you, if you are not told to do the general ledgers, please do not do them. Ne? Because you can actually do this, you can actually do a general journal without even drawing up your land and without drawing up your ledger accounts. The only thing that you need to know is when to debit your capital accounts and when to credit your capital accounts. If you know all that, then you can even just do your distribution calculations here. For instance, like here you have 130,000. You can even just do your calculations here. 130,000 over 3/5. Like that. Instead of you drawing up a machinery account, which requires, I'm sorry, not machinery, with your land and building account, which requires a lot of time. Yeah? And like that, you are just wasting your minutes. You might not finish writing. Do we understand? Are we able to draw up a general journal to record the revaluation?
Yes, I prefer to do the calculation on the general journal itself, rather than just.
Yeah, better than doing the ledger accounts. You only do the ledger accounts if you're asked to do the ledger account. But if you're not, it's straightforward. Just go to the you just go to the general journal and record straightforward. For as long as you know what to debit and what to credit. Okay, can we move on?
Yes, please.
Okay. So the next thing that we do here, hold on. Okay. So now I was thinking of if we can maybe finish this whole if we can maybe complete the exercise, then we can do the revaluation account. Or what do you think? What do you
Yes,
think?
can you please finish
Okay.
the exercise?
Because in most of the examination question papers that I see, they hardly ask for you to draw up the revaluation account
Yes.
and also the ledger account. So it's good that we focus to the most important things first.
Yes.
Now we move on to question 2, which is very important and most of the students fail to understand. Goodwill.
Question 3.
Oh, question 3. So we should listen very careful. So goodwill. So the first thing that you need to understand here is the meaning of goodwill. So you are told to calculate the amount of goodwill recognized when the new partner was admitted and prepare the journal entry to this effect. Okay. So first we need to calculate our goodwill. And what is goodwill? What is the meaning of goodwill? Anyone? What is goodwill?
Goodwill is an intangible asset that is associated with the purchase of a company by another.
Okay, in simple terms, goodwill is the good reputation of your business or of your asset. Let me say you have a house in Klein Windhoek, for example. Ne? The environment is very safe, clean. You understand? So you have 2 houses. I love giving examples. Or you have 2 houses, similar houses, well furnished and everything. They totally look the same. So one house is maybe in Klein Benduk, the other one is in Ombili, you understand? So if you are to sell those two houses, you won't sell them at the same price. Why do you think so? Because one has a good reputation, or one is in a safe and clean environment. So that safe and clean environment is now the good reputation of your house. One is in a poor, let me not say poor, but one is in a kind of like a poor environment, ne? There's high crime rates, for example, there is a lot of noise and so on. So the prices will differ. The one in Ombili will be cheaper compared to the one in Klein Benduk. Now, because of the good place that your house is located in, you need to charge for that. And that is called goodwill, when you are being paid because of your reputation of your business. Now, if your business has a good reputation, it's situated in town where there are a lot of customers, it has a lot of assets, for example, ne? It's doing very well, it does not make losses, then anyone that wants to join that business will have to pay you for a job well done, for example, if I should say, ne? And that is goodwill. They will have to pay an extra amount on what the business really is valued at. So both, like the two houses, if I'm to compare now the two houses, all the two houses cost you 1 million each. Ne? To build up that house in Klein Benduk, it costs you 1 million. And to build up the same house in Ombili, it costs you 1 million. Ne? But if you are to sell the one in Ombili, you even sell it for 2 million. And then the other one, you just sell it for 1.4, for example. So the difference, now that 600,000 is the goodwill. You are charging extra because of the good reputation your company has. Okay, so let's continue. Now, in this case, we need to calculate our goodwill. Now, how will you calculate goodwill in this case? How will you calculate goodwill? So first you need to calculate you first need now to calculate the goodwill, ne? And also do adjustments of goodwill and draw up your journal entries on goodwill. So we said that goodwill is paid by the new partner. So the first thing you ask yourself is, how much did Mark pay the business?
How much he contributed?
He paid
Yes.
440,000.
I mean, how much did it contribute?
440.
It was
440. 440,000.
440,000.
440,000. Okay. So we have just write. Let me do it in a table format. Give me a minute quickly. Okay, so you say that he contributed 400, and so you can even say contribution, Parker's contribution So Parker's contribution was how much?
440,000.
440,000.
It was 440,000. And then from there, we minus the value of our assets, or the fair value of all our assets combined. So in this case, fair value
Is this the fair value of the assets before or after Parker joined?
is it?
Is it the value of the assets before or after Parker joined?
It's after he joined.
Okay.
So it's fair value. So let's calculate our fair value quickly. Oh, my phone is so cold. How much will you get? So what kind of assets do we have there? Goodness. What's going on with my allergy? Okay. So we have that's all. Let's give me a minute quickly while I do the correct calculations.
Are these things on the debit or the does the goodwill of the debit and the credit side? And if it is, then is it are the contributions and the fair value of identified asset on the debit side, and why?
Are there?
I asked name.
Mm-hmm.
So when you record these things on in the goodwill account,
Mm-hmm.
so the goodwill must have the credit and the debit side, isn't it?
Yes.
Okay. Okay, then why are these things on the debit side?
Why are the things on the debit side?
In
Okay,
the things that
usually,
you recorded now.
okay, when it comes to goodwill name, the things that we recorded were no, this is not a ledger, it's a table. Guys, this is a table. It's not a ledger account, it's not a goodwill account.
Okay.
It's a table just to do calculations. It's not a ledger account, please. Yeah? But when it comes to the recording of goodwill, it depends on the questions. Usually the old distributing goodwill among the old partnership, that is usually on their credit side. However, if you are told that goodwill is to be kept, to appear in the new books, then that's where you will have debit entries. Let me quickly just do the calculations quickly. Mm. So we have minus what is this? Minus 80,000. Thousand. And then okay. And then 700,000 plus 90,000. Then add just give me a minute quickly. It's 376,000. Where am I doing? Five 80,000. Then you plus 70,000. 154,000. Then you plus 3, 5. It's quite challenging.
Are you calculating the value of the identifiable assets?
I know that it's is a total for partnership, like after hold on. Give me a minute quickly. Minus I think I'm a bit confused, eh?
What are you
Because-
struggling with?
Just give me a let me see. Okay, guys, what is the first, what is the fair value of your identifiable assets?
Come again?
125 plus the owner's
And
equity.
Sarah,
Yes.
Sarah, may you please explain what identifiable assets are, because some of us are lost, really lost.
Okay. So identifiable assets, these are the assets that are available in the business that can be identified in the business. So what is their fair value, their net fair value of your net assets? We all know what assets are, right?
Yes.
Yes. So now their fair value of those net assets. Do you understand?
So does that mean we add the revalued figures of the assets after they've been revalued, or what?
Does that mean?
Does that mean that we add up the assets, the values of the assets after they've been revalued?
Mm-hmm. So what is the what net fair
And then you
value are you?
subtract?
What net value are you getting? So I'm getting different answers here. Is there anyone that calculated it?
No.
Are we adding the